Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, November 10th, 2020. I wanted to get a video out to follow up to the post I made this morning. Showed some what I call potential bounce targets. I mentioned that my convictions weren't very high right now, but it was an attractive RR. It still is. And I'm going to go over levels, and I want to talk about that real quick. I want to talk about two things. Number one is the difference between near-term and near-term outlook, near-term developments, and then the bigger picture. So, what I posted this morning, again, I said I didn't have the highest conviction it's going to pan out. That was a near-term setup, and it still is. We're here now. Not crazy about the fact that so far they've sold the open, but that's it. So I said 1155, 40, ish, and the comparable level on S&P 500, which I'm going to get to in a second. So both are at support. So things that support that case for a short-term bounce are, number one, that support the fact we're pretty darn oversold. So I'm going to just show you some of the things here. So we're oversold. It was a pretty big drop off the high. I mean, a big drop. One of the sharpest drops, especially over that time period in months. I mean, you see, remember, here was the last correction. We had a sell signal there, divergent high, and we moved down, but we didn't move down as impulsively. And we started to get some pretty impulsive selling towards the end there. But this drop, and you look at not just the distance that we dropped, but how quick we dropped, is bigger than anything we saw right there. So that's pretty impulsive, and I want to point that out. What that means is, so overall, that may have more, longer-term bearish implications. However, what it did, because it was such a big drop, is I'm going back down here to the RSI. That's a measure of how overbought or oversold a security is. And you can see I have a couple lines here. I did have to replicate this chart, or replicate these lines. You might notice slight differences on the levels from my previous chart because I was playing around with some settings on the charts last night and wiped out all my trend lines. So I put them back, where close as possible where they were. With this charting program, you can only drag and they snap. They don't snap on every the exact percentage there. The points are going to vary. You cannot edit. In other words, if I drag this line, you can see this. It jumps from I don't know what just happened there, why that happened. Let's go back to this chart. You go from 1155.46 down to 1152.16, back up 1155.46. See, I don't have a lot of, now it's 1155.36. Hard to zero in those lines. I just want to clarify that for those of you that might say, wow, Randy, that number is a little bit different. These are pretty much the same, at the same levels. And again, you're talking a 12,000, almost 12,000 point index. A couple points is virtually nothing on that. So these are the levels, and bottom line is we're at support. And near-term oversold. This again, the RSI. Typically on the charting programs, they'll give you a 30 level for oversold and a 70 level, which is about right here, for overbought. But as you can see, I make my own levels with every security because they're all different. So I like to see right now, or at least recently, when NQ gets down to that 25 level, as it just has, that's typically where you get a bounce. Even if you're in a downtrend, you can see there we hit it, exceeded it, and we had a nice tradable bounce. I'm sure that was 3% or more right there. Right here, even in a downtrend, we hit it and we had a tradable bounce. From that point, we equaled it there, but before all is said and done, we went up there. Again, you can measure that out. So you see the point there. These are the tradable bounces, and that's what I posted this morning. Only short-term, potential short-term trading up, and I'm going to show you here in a second. Some bearish developments that may counter this out or override these potentially bullish developments. The other thing, if you note here, is the PPO. The PPO is starting. It's made a couple attempts. It's curled back up. Look like right here. I'm gonna have to zoom in. I know you guys on the video. You should expand it full screen. Number one, if you're watching these videos, expand it full screen. You can see these things better. PPO was turning up here. Looked like we're going to get across, but we didn't. Did the same thing. Looked like we're going to get across this morning, but we didn't. Now, a bullish cross at this point, I think, is imminent. And bullish crossovers are typically near-term. When bullish crossovers on the PPO will give you a near-term, trend change or near-term buy signal. They're not 100% effective, but when used with other in conjunctions. I don't know why my chart keeps jumping back to sugar. Maybe it's trying to tell me something here. I'm not doing anything and this chart keeps flipping over to my SB. Oh, I see. I have it behind there. I might have clicked on something. All right. Excuse me, guys. I keep trying to pause the video. I'm still suffering from lingering effects from COVID, and right now my cough is flaring up this morning, so I did want to get the video out. I normally would wait till that subsided. All right, back to where I was. I'm sorry about that. Potential low-level bullish PPO crossover. There was a PPO crossover, a bullish crossover right at the zero line, right about there, and it preceded this rally right there. You had whipsaws here. When you get whippy like this and the lines are tight, I like to look for clean separation. What do I mean by that? I mean, here's clean separation between the PPO line, the orange line, and the signal line. Clean separation, nice clean crossover. Clean separation, bearish crossover right here, and that said, okay, the trend has changed, and that also coincided with a breakdown of the trend line. So there was confirmation on this sell signal, the breakdown in the back test right there that led to this. Okay, so that's that. We're looking at, we don't have it yet, but what appears to be a pending bullish crossover. I'm going to go over just a few more. Here's a nice clean one down, and it's low level right there. Boom, and it got you in there. And so forth and so on. It's not many. The lines were compressed here. Again, I like to see the separation, separation between the PPO and signal line, and those are the what I call clean crossovers. So, you know, when you're flattening out here because there's low volatility, you're going to cross back and forth, and that's just all whipsaw. So I really don't put much of an effort or emphasis, I should say, on the PPO when it's flattened out like this. I like that clean separation. Okay, enough on that. Therefore, I'm still reiterating and making the case for a near-term bounce. I gave you the targets this morning, potential targets. And so if we can hold or even punch down, you know, we're heading to those lows. What happens? The powers that be, market makers, algos, all the nefarious forces in the markets, when you get down there, they're usually going to want to run the stops. And that's why I suggested a stop. Give it if you can, a 60-minute candle close. Now, sometimes you break support and you dump, and by the time the 60-minute candle is printed, you can have a big move. So you're going to have to decide how much room you want to give it, and that's also going to be in line with your bounce. Now, look, if you think the market's going to new highs, man, you can give it a much, much larger stop if you think we're going to new highs and beyond, because that's not even the previous all-time high right there. There's not a lot of decent support until about down here, about 1128 or so on NQ. So, you know, solid break could bring us there. I just don't think it would go straight down. Like I said, we're pretty oversold right here, and we don't have that bullish PPO crossover yet, but if we get it, even if it comes after a little slice down, I still favor a move up here to at least 11,835 or so, and possibly 11,943. So just want to show you that. Okay, so that's all potential near-term bullish stuff, and I'm going to get back to the SPY and then QQQ and then ES in just a second, but I'm going to now flip over to the daily chart and tell you why all these potentially bullish developments may just get overridden by what's going on the daily, more important daily. Okay, here's the daily chart of QQQ. And yesterday I pointed out that we had bearish engulfing candles. Should have added and added to that you want to look for them after an extended uptrend or near a top. We're still near the all-time highs in QQQ. We're a little bit below it, so that could still be considered a topping stick. You don't want to look for these after a big downtrend or a bear market's over and you're rallying early on. They don't mean that much there. So you look for them as potential topping sticks. And as I said yesterday, just the bearish engulfing candle to me isn't a go short, sell all. It is a possible topping stick, but you want to see a confirming candle, and meaning a red candle follow up. And that's certainly that. And as I said yesterday, the redder the better. And we're down another 2.5% on QQQ. So unless we reverse soon, the case was made there for that possible reversal. This is not good. And, I always give preference to what's going on the daily charts are more significant than these shorter term charts. QQQ is now breaching that 283. It's a pretty decent support level. It's the, effectively the top of the gap. We have the bottom of that candlestick right here, a little bit above it, but the body of the candle is there. I've had a line here at 283. We have a lot of candles there, a lot of candles there, you know, reactions. And that's what makes that level to me significant. So we're starting to crack that. If we don't reverse very soon, that should open the door, at least on this daily time frame down here, to move to about 275. You know, we had held this 9 EMA, the signal line on the PPO, has so far held above the 0 line and made a successful back test. But you can see, if I zoom in tight, the PPO line, which is the orange line, is curling back down, saying the momentum is turning. And so that's something else I'll be looking for to signal maybe a bigger trend change, is across down below the 0 line. That's this white line here, the signal line on the EMA. 9 EMA is the signal line on the PPO. So there is the bigger picture bearish stuff, and right now nothing but bearish. The day is very young. This candle could turn green by the end of the day. If it did and you rallied again, you might want to align. If we do get a bounce trade on QQQ or NQ, what would be a logical bounce target? Well, a backfill of today's gap. That's right there, the bottom of yesterday's candle. That's a potential target, and that may be where the sellers step in. So that would be, if you're trading NQ and we get a bounce, well, that's where you're going to take it out. As of now, the case for the bounce is looking a lot worse than it was this morning. In fact, I will tell you right now, I wouldn't, because QQQ is cracking support. Even though I just showed you the NQ is right there. Oh no, look, now we cracked it. So I would not, at this point, take the long. Give mine a little bit more room, as I talked about. You know, wait for maybe at least a 60-minute candle close there, a little bit below, let them run it. But if I were to be watching this video now, I thought about the trade this morning, but I didn't take it. I'd wait for recovery back above 1155, and also on QQQ, recovery back above 283. And if we get that, I'm leaning that way now. Again, you can take a shot here, but it'd be very aggressive. Why not just wait for a little more upside? I'm leaning that way, that this is just a whipsaw, a stop clearing move. Well, in other words, it's shake out some more longs, suck in some more shorts, and that would give the fuel for a rally here. What do I mean by that? It would give some short covering for those that shorted this breakdown right here, and that just shorted the breakdown in NQ I just pointed out. Those shorts, if we run back up, they're going to realize, the breakout failed, and they're going to cover. You also, in that case, would have shaken out some weak-handed longs. What are weak-handed longs? Well, weak-handed longs are the ones that bought all the hype about the vaccine, or the fact the market was rallying because of a Biden win. Ridiculous in my opinion, but either way, if they bought into that hype yesterday and they're already shaken out now with this reversal, that's weekend. You have strong-handed longs. Those are investors, trend traders, those with conviction that this market's going to new highs, and they're willing to ride out, you know, 2-3% pullback, maybe have longer stops. Some of them, you know, are strong-handed longs because they're stubborn, and they might ride the damn thing down, you know, 20-30%. Some people just tend to hold on to positions and freeze like a deer in the headlights when the market drops. But I think you get my point. A weak-handed long is someone that's easily shaken out, and that's a good thing when you shake out weak-handed longs for a trend. If we're going to have a bullish trend, because it puts a core holding, a core of holders in the stock or in the market, in this case, that are less likely to spook on any little pullback. Okay, so that's a lot of talking, but just to summarize it, nothing but bearish right now on the daily chart, and the daily chart is more significant what happens here than the 60-minute chart. So until and unless we can reverse soon, that opens the door for another a downside from where we're at now, about another 2%. SPY, SPY, my oh my, look at that. Look, there's that big pop. Look at that euphoria. Again, I told you yesterday, it didn't feel right to me. I mentioned red flag, yellow flags, red flags, whatever. And you know, based on the headlines, this is just, I think this is retail money. No offense, we're all, you know, call me a retail trader if you want. You know, I trade for a living, but not, you know, just for my own account. So if you want to put me in that dumb money category instead of smart money, you know, institutional traders are considered the smart money, retail crowd the dumb money. But that reeked of retail buying right there. All that hype, which I think was overblown. You know, hey, I hope this vaccine is the bomb, but I told you, way too early. They picked a very small sample group out of the bigger study population, reporting on how 90, people it worked on and had a 90% effective rate or something like that, 94 people. And again, like I told you, with vaccines, my goodness, this virus is so new. Day by day they're learning. There are new things coming out. They have no idea. They're just learning now about long COVID. They thought you got COVID, you were over it in a couple of weeks. I'm one of those people suffering from long COVID. According to my doctor, I don't have the virus anymore, but I'm suffering from inflammation, flare-ups, inflammation that started from that disease, and I'm 2.5, almost 2.5 months into it, and trending in the right direction, but who knows how much longer I'm going to be dealing with this. And that there are people a lot worse than me that 7 months into it, are suffering debilitating symptoms. Okay, with that being said, I'm just speaking to that virus thing, and again, I think that was way overhyped to see those, all those virus-stricken stocks like the travel stocks, airlines, and all that rally on what they did with hopes from the vaccine. Very preliminary studies, and even then, let's just say it's good. This virus may morph. How long is that vaccine? They don't even know how long the vaccine's effective for. I think it was effective for a week or a couple weeks in that study. You get the shot. What if 3 months later it's not working anymore? So it's, to me, ridiculous for what everything did, as much as it did. A lot of those stocks, 20-30% one-day gains. But it doesn't matter. I'm rambling here. I am. What does matter is everyone that chased that huge candle. That was the biggest one-day rally in a long time. Smoked today and underwater. And that's just not a good thing technically. It's not the end of the world because, look, bigger picture on the SPY. I showed you the bearish developments on QQQ, don't get me wrong. Yesterday I harped on the fact that, look, QQQ has the market leaders. And when the market leaders start to underperform and roll over, be careful because the rest of the market's most likely going to follow, unless that proves to be just a temporary correction, temporary rotation into some of these other names. Still a possibility, still too early to tell, but certainly something to monitor. And again, that's something I'd call a yellow flag. All right, from a technical perspective, here's the downtrend line in SPY. So yesterday's big green candle was a breakout, and it was very impulsive. Every check mark met. There's my volume bar, big volume, big green candle, and a back test. So here's a case, even on the daily chart, to step in and go long if you're bull, with a stop somewhat below. Now we zoom in tight. Yeah, we're a hair below my trend line, but on a daily chart, not by so much. In fact, take this trend line right here and tighten it up. What I mean by that, let me get it over here so I can play with the end of it. This candle, I didn't touch it, so I'm going to pull it down a little bit when I zoom in really close. So if I can do that here, having a little hard time. Pull that down, hit the top of that candle now, and there we are. So there's the trend line. Perfect back test. Okay, so I've been talking now for 17 minutes, showing you potential bullish things on the short-term chart, potential bearish things on the long-term chart on QQQ, but the S&P 500 right now is a breakout and a back test. So this is TA 101, technical analysis 101 or trading 101. You buy a breakout above resistance, it's objective, or your another objective entry is a pullback to support, and that's exactly what we have right now. A breakout and a back test of a trend line that was validated with 3 distinct reactions right here, and that's it. So there's the case for your rally. PPO is still in bullish territory, and if the buyers can step in here soon and rally it off, then there's your case. And if you're a long-term investor, especially if you think this market has a lot more room to run, that's a nice op. I told you yesterday, not objective. I wouldn't have chased this rally with your money yesterday up high, but I'd be much more inclined to buy, and I did. I went long this morning when I put out that setup. I went long the NQs, but again, if you're a long-term investor, there's your trade. And like anything, it's either going to work out or not. So you have a stop a little bit below there, especially on a solid daily close back down through the trend line. And I think that's it. Let me make sure that's all I wanted to cover. Yeah, here's that 60-minute chart of SPY. Remember, there's the gap right there. There's a big old gap. That's Friday's close. We gapped up yesterday, and I told you guys yesterday a potential target would be a backfill of the gap. That's a natural target. A lot of eyes are on that. So I would be quite surprised, not shocked, but surprised that the buyers didn't step in on a backfill or a near backfill. If the gap is at 390, I don't know where exactly, to wherever we close, somewhere in there, you don't want to wait for a pullback to exactly that level, because quite often the buyers will step in a little early. So right about here, you could step in, with a stop somewhat below the gap. If we do take out the gap, I'm talking again the bottom of the gap right here around 350 or so, well, you also have another gap right here and a level there that could act as support. So in summary, looking at the 60-minute chart of SPY, there's another check mark or reason to step in long here with a stop below as an objective long entry. And finally on QQQ, let's see, we had, well, this is a big level, the blue line. The blue line was the top of the trading range we were in for a while. I called it the September to October trading range. So that was significant support back a while ago. Not as much lately. We're into this gap here. But again, if the SPY buyers step in, then QQQ will probably follow. It'd be ideal to see QQQ at a more solid, more recent support level. And where is the next big support? Well, here's the bottom of a big old gap down there, about 247.91. That's the gap from here to here. So there's the bottom of your gap, which we're pretty much at now. We slightly violated it, popped back up. We're almost back above it. And then finally, I'm going to rifle through the 60-minute charts of just the market-leading FANGs, and to help make a case again as to why I'm giving my long a little more room on a bounce. Apple, largest component of the Nasdaq 100 and S&P 500. There's a gap right here, big old gap, and that was the most recent gap on the 60-minute chart. Boom, a almost perfect backfill with a slight momentum fueled overshoot. Again, this is why I talk about supports at 114.55 or wherever. That's where I have the line. It's also the top of this gap right here. These reactions. So, if 14.55 is my support, I'm not going to have a stop at 114.54, especially with a lot of downside momentum, that you're going to get a momentum fueled overshoot most likely, and then a move back up. And that's also why waiting for a 60-minute candle to finalize, to print. See, this candle's still in the works right now. It'll be over, soon and finalized, but we broke it intra-period and moved back up here. And so far that is we're a successful, well, I'm not going to call it a successful defense of support. We're pretty much testing that support, but we breached it intra-period and we're back above it. So keep it simple. You want an objective long entry, go long at support. There's gap support with a stop somewhat below, ideally on a 60-minute close. If that level goes, you can see my next support on Apple right there is about 112.33. I'd have to verify that level, but there's some nice candles right here around that 112.33 level. But I'm leaning towards a bounce here, like I've been, I think, made clear so far. Microsoft, just ugly, choppy price action recently. Very toppy looking to me. Again, these are your market leading FANG stocks. I had a trading range here. It's been, Microsoft spent most of its time in wash, rinse, repeat, and go short or long at the bottom of the range, sell your longs at the top, go short to the bottom, back, forth. Other than that, we've had 2, now 3 pops above that range. So I have a line here, and it's a pretty important line. It's about 224.72. It's the 78.6% Fibonacci retracement. It's also very good. It was support right here, resistance right there at that high. We popped it briefly, but again, resistance right there, and rejection, and back down into the range. So just Microsoft going nowhere now for months. We're back into the range that we were trading back into June right here. And here's support. There's a big old gap right there. The bottom of the gap's at 208.35. We're in the middle of the gap, so I have to say that we're in no man's land. I can't make a strong case, unless Microsoft was at the bottom of the gap, but maybe it enters. Sometimes you enter halfway. If enough stocks and the indexes hit support, then you can reverse. So I just want to point out where we were, levels to watch on Microsoft. And again, I'm talking near-term stuff. Longer term, until we clear these highs, with conviction and get away from this trading range. That's longer term bullish. That's longer term bearish. And until then, it's noise. A lot of trading ops. If you're an active trader, a swing trader, get in, get out in these little micro trends. There's money to be made. But can trade the indexes. You get a little more diversification, of course, trading an index ETF. And of course, if you use the futures, you have that leverage that you don't get off trading individual stocks. All right, next one up, Amazon. Amazon, see the same thing as Microsoft, just a multi-month trading range. It goes back, in this case, to early July. There's your trading range, 2 failed attempts to break above it, and simple stuff. Be short at the bottom of the range or sell your longs, go long at the bottom of the range, ride it to the top. There's a little spike, wash, rinse, repeat, up, down, top, bottom, top, bottom. I mean, this, by looking at this chart, it says we'll probably, since we already got rejected off the top, we'd probably see the bottom of the range. But I do want to point out, I'm going to do that right now. Here's a gap. There's the bottom. That's where we closed that day. And we're right there. So if Amazon can reverse soon, it will have just a brief overshoot of this gap, and then we could bounce. And again, that's all I'm looking for right now on a long trade. Is just a quick bounce trade. Get in, get out, make a few, a couple percentage points. Get out, move on, wait for the next objective trading op. So I think I've made it clear, I'm kind of still in that short-term mindset, short-term trading, active trading mindset. And how could I not be? I mean, here's the market-leading stocks haven't gone anywhere. I don't care if the S&P 500 peaked out to new highs yesterday intraday. That's already failed, by the way, that breakout to new highs. Market leaders have stalled out here, and this could be a big topping pattern. Maybe not, maybe consolidation before the next move up. But just like I showed you my longer term outlook on gold, unless we pop these levels with conviction, just like the euro US dollar needs to pop that long term downtrend line for the next big buy signal on gold, to put a trend position on, we need to see these market leaders break out the new highs, or else they're just going to be like a heavy lead blanket on the market holding it down, no matter what energy and the industrials do. All right, next up, we're almost done. Facebook. Yeah, let me point out here. Let me move this fib line, get it out of the way for you right here. Let me show you what stands out. Here's a gap. I'm going to zoom in here a little bit. Okay, there's where we closed on, what day is that? Tuesday the 3rd. And so the bottom of the candle, let's see, the close was that, well, whatever. I'm going to use the bottom of that candle as the gap, bottom of the gap. And so far, boom, Facebook briefly took it out intra-candle back above it. So there's another check mark or another objective reason to make the case for an objective long entry. Because again, if all these things, the majority of these things bounce, not all of them, the majority, the market's going to bounce, or at least the NASDAQ 100 will bounce because of their heavy weighting. Doesn't matter what the remaining 90 stocks do. It does to an extent, but I mean, these guys are so heavy weighted, you just watch these big 5 fangs, and that's where the NASDAQ 100 is going. All right, that's it. Alphabet, not a great looking 60-minute chart. It's been one of the stronger fangs lately, but boom, bearish rising wedge pattern, divergent high. There's your negative divergence, breakdown, impulsive selling so far. First support right there, and target is 1737. We briefly undershot it yesterday. We actually undershot it by more today, but we're back right around on it. So again, the story is a lot of these fangs are at or very near support. If they can hold that support, we can get a little bounce trade. If they go much lower, we're going to head down, probably break down and head to the next support levels in the market. And you can see in Alphabet, that's about 1705. And then this is a big level here. A lot of reactions there, about 1659. So 1700 or so goes, then that would open the door down there. Again, we're pretty oversold, but oversold in itself is not a buy signal. It's just, hey, you may not want to start if you're not already short. You may not want to heavily short right now. You may want to wait for a bounce. That's what oversold tells me. All right, that's it. I'm just going to wrap it up with a very quick update on gold, because I mentioned yesterday that was, I'm not seeing a lot of trades I've been comfortable with yesterday, but that was one I think we're taking a shot at. And nothing big so far, but it did defend that previous low here, about 1852. You had these lows, defended that. bounced, got back above the trend line. I mentioned that in a comment on the homepage today. So that's bullish. And then back tested the uptrend line and has rallied off there so far. So I'm still maintaining a target up here to either the downtrend line and or that 1914 level, just a little bit above there as a near-term swing trade. We will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.